There's no question that just like there's going to be a run on the banks, meaning people are trying to get their money out of the banks, they're going to be running to put it into gold because no money is safe now in the bank because either your bank is going to fail and you will lose your money, or your bank won't fail because the government bails it out and your money will lose its purchasing power. So either way, you should withdraw your money now, but don't stick it under your mattress because it's going to lose purchasing power there too. You've got to convert it to real money. You've got to turn it into gold.
Peter Schiff is an American businessman, investor, author, and financial commentator who is known for his views on the economy and financial markets. Schiff has been a vocal critic of the Federal Reserve's monetary policies and the U.S. government's fiscal policies. In terms of purchasing power in the USA, Schiff has been critical of the Federal Reserve's policies of low interest rates and quantitative easing, which he believes have led to inflation and a decrease in the purchasing power of the U.S. dollar. Schiff argues that the government and the Federal Reserve are devaluing the U.S. dollar by printing too much money, which reduces the purchasing power of each dollar. He believes that this will ultimately lead to higher prices for goods and services, making it more expensive for people to live and decreasing their overall standard of living. Overall, Peter Schiff believes that the U.S. economy is in a precarious position due to the actions of the government and the Federal Reserve, and that individuals should take steps to protect their wealth and purchasing power through investments in assets like gold and other precious metals. Listen to Peter Speaks.
Now, if banks could offer you a high enough rate of interest to offset the inflation, then that might be an incentive to leave the money in the bank. But the banks can't do that because they can't afford it because they're broke, because they've already locked up all their deposits in long-term, low-yielding mortgages and treasuries, so they can't pay you enough to offset the loss of inflation, but they can't stop you from withdrawing your money. The problem is they don't have the money because the money has been lost. That's what happened to Silicon Valley Bank or Signature Bank. So as more people rush to withdraw their money from banks and use it to buy gold, the Federal Reserve is going to have to print more money to enable those withdrawals, which is going to create even more inflation, which is going to accelerate the appeal of gold and cause even more people to deplete their bank accounts to buy gold. And then it's a vicious circle of, collapsing banks and runaway inflation. We'll absolutely return to a gold standard. I mean, a gold standard has been the monetary system that has dominated through most of recorded human history. And I don't think that that's changed. I think we've temporarily experimented with fiat currency. The experiment is going to end in disaster, and it will prompt a return to what works, and that is gold. And whether it's governments or the private sector that lead the way, ultimately that's where we're going to go. And we don't need governments to remonetize gold. The private sector can do it all by itself. In fact, gold was money in the private sector before it became money in the public sector. It became money for the kings because that was the money that everybody wanted. That was, if you wanted to pay your guards, you needed to pay them in money that they could use to buy food. And the farmer wanted gold. And so that's what the kings collected in taxes. They collected gold so they could pay their soldiers, right? But I think what would happen now is private enterprises, private businesses, whether it's a bank or any other institution, doesn't even have to be a financial institution, but it has to be capable of holding custody of gold. It can then digitize, tokenize that gold, put it on a blockchain or other form, and allow individuals to own those tokens and then transact in them on the internet instantaneously for a low cost. They can price goods and services in grams of gold. They can pay for it and be paid in grams of gold, and gold can circulate easily around the globe as money, as a unit of account, as a medium of exchange, and as a store of value. And so I think we're headed in that direction. As far as what the Chinese may do, to the extent that they may decide that they want to back their currency by gold, make it redeemable into gold, I think that would be a very prudent move on their part. If they're interested in having the dominant currency in the world, that would be a way to secure that position. Clear. I mean, the power has been shifting for quite some time. And if you look at the relationship between the United States and China, is clearly the rising power, and we are the declining power. China enjoys an enormous trade surplus with the United States. China has the industrial capacity that we lack, that we lost over the years. So the real production and wealth creation is taking place over there. And all we're doing is buying what they produce and borrowing the money they save to pay for it. So I think we have this phony economy that has been propped up by inflation and cheap debt, and it's in the process of collapsing. And when the dollar loses its reserve status, that'll be the final nail in the coffin. And I think the American standard of living is going to plunge because the dollar is going to collapse and prices are going to soar. And we're not going to be able to import what the rest of the world produces. Now, the rest of the world, if they don't export their production to the United States, well, they're going to have more for themselves. So Americans are going to have to make do with less, but the rest of the world is going to suddenly find that they have a lot more. And so while our standard of living goes down, outside the United States, particularly in the emerging markets, the standards of living are going to go way up. Well, first of all, I think almost all economies have less risk than the United States, whether they're developed or developing. The United States is unique in the enormity of the risk, especially the risks that very few people perceive. So I think that you're in much better shape if you avoid the U.S. market, bonds, stocks, just kind of totally, and focus internationally, where I think the risks are there. They're just not as severe, and I think there's a lot more upside. So in exchange for accepting that risk, I think you have a disproportionate upside potential. Whereas the United States, I think the upside is very limited and the downside is quite substantial, especially when you view it from the prism of, let's say, gold, real money, as far as how much value U.S. assets may in fact lose if you price those assets in gold. You can't simply look at what the price of stocks would be or bonds in dollars if you have a moving target because the dollar is collapsing. And so it's hard to measure the value of something when your ruler is constantly shrinking, right? So you're not going to get a good result. So I think looking abroad, investing abroad in foreign stocks, dividend-paying value stocks, I mean, that's what you want to do. That strategy has been paying off. We substantially outperformed the U.S. markets last year with positive returns in our dividend payer strategy and our value strategies, even despite the strong dollar, because these were all international stocks that managed to close the year in the black, while the Nasdaq was down 30%, and smaller declines in the S&P and Dow, but still substantial declines. Brazil, I mean, there are a lot of other things that could benefit Brazil. I don't know if they'll happen, but I have some investments in Brazil because I believe that the commodity boom is still young and has a long way to go, and I think Brazil will benefit from that. And they're not the only country that will, but they're one. But Southeast Asia in general, I think, is going to do extremely well as a result. I mean, the countries that are producing the most and saving the most are the ones that are in the best position to prosper during the coming decade. It's a country that is dependent on debt and consumer spending for its GDP growth. Countries like that, which of course, the United States is the poster child for that kind of a dysfunctional economy, those economies are in a lot of trouble.